Hello everyone, and thank you for joining us today, and welcome to this presentation of what to do once you're in the trade. Now, as you'll see in today's presentation, in this educational webinar I'm going to be giving you today, you'll see how simple trading can really be and how you can get onto that road to consistency if you ask the correct questions. And I'm going to show you exactly what those questions are that you should be asking. But let's begin by first showing you an example of how most traders trade, myself included. This is the way when I first started trading myself. This is the way I used to trade, and this is why we feel most traders fail right off the bat in their beginning stages of their trading. For example, we see here, this happened at the end of last year. This is how most traders base their trades off of news. There was breaking news as reported here in the LA Times that the Fed hikes the key interest rate for the first time in nearly a decade. So it says the Fed raised its benchmark short-term interest rate for the first time in 9.5 years, 7 years to the day after lowering the rate to near zero. Okay, so this news comes out, and as we see here later on in the chart of that exact same day, the market closed up higher and closed towards its highs. So you perceive this as being rather bullish. You think this is going to be good news. You can see right off the bat that the market likes this news after the announcement came out midday, and so you decide to jump in. This is a chart of the Dow. So you're in your stock or your ETF or your option trade, whatever you want to do. So you're long, you're excited, you're thinking the market rally is going to continue, and lo and behold, the very next 2 days, the market not only goes lower, but is in fact closing lower, making brand new lows. Okay, so most likely you stopped yourself out, you've taken a major loss here, and so you think, well, maybe that was, I just jumped the gun, maybe that was actually bad news. So you decide to reverse and you say, instead of being long, I'm going to sell my position and now I'll be short. So you go short, and a week later the market is flirting with new highs. Okay, does this look familiar to anyone? This is the way most traders fail, or most traders trade, and why most traders fail. Because you're basically a day late and a dollar short. You're making your decisions based off of faulty information or indicators, or even listening to somebody in a chat room or a trading room. And what you should be doing is basing them off of consistency and things that work. Well, this is what we do at Specialist Trading. Once again, my name is Steven Primo. I'm the president and founder of Specialist Trading, and I've been trading for nearly 40 years. And what we do here as an educational company is simply to educate you with the tips, techniques, and strategies that have stood the test of time and that show high levels of consistency, rather than relying on conventional wisdom, which really shows no basis for working over time. Because if it did, then 90% of all traders would be successful. But it's actually the opposite. The statistics show that 80 to 90% of all traders ultimately fail. By failing, we mean you give away all of your nest egg. So what we do at Specialist Trading is try to instill all the things that have been able to sustain me for nearly 40 years, and hopefully will sustain your own trading. Okay, I started out my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. A specialist was simply a market maker, someone who made markets in roughly 50 or so stocks. I made markets through the crash of 1987 and the bull market that followed. I left the floor in the mid to late 90s to manage money and also to pursue my own trading account. And about 7 or 8 years ago, I teamed up with Pro Trader Strategies, and they market and promote all of my courses, and I just handle the educational portion of the business. So that's all I do. I educate and mentor all my students the same things that were able to turn my trading around. This is what I do at Specialist Trading. All right, now I'm going to show you some really great techniques and ways in which to increase your odds for success in trading any methodology, any market, any direction. But before we begin, we are required to show you our disclaimer. So once again, please take a moment to view this. I'm going to share with you a lot of performance results showing you these techniques today, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So as you're taking a moment to view our disclaimer, I would also like to invite each and every one of you, if you haven't done so already, to follow us on Twitter. Please write down our handle right there. It's abbreviation for Specialist Trading, at SPCLSTTRADG. We have a lot of great information that we post. In fact, just yesterday I posted that there were a number of buy signals that were generated yesterday, not only in stocks but also in ETFs and in major market indices. And so members who are privy to these stock strategies, as well as ETF and market strategies and E-mini future strategies, would have seen these being generated yesterday and had a chance to jump into the market well before today's rally. I believe the market is up 200 or so points after we had tweeted that. So there's a lot of great free information to follow us on Twitter, although it is rather limited. If you would like to get more detailed information, my sister site, which is Pro Trader Strategies, has a Facebook page, so simply log on to Facebook under protraderstrategies.com, and you'll see a lot more detailed information. We have videos, a lot more information about myself, about the companies, and so once again, a lot more detailed educational information on our Facebook page. Okay, now as we stated in the opening statement, we are an educational company. What does this mean? It makes us different from all the other websites and teachers that you may see out there, because that's all we're devoted to. Even though we provide all of our members with strategies and signals for these strategies, we're more about teaching you how to understand them and understand the process so that you can ultimately make your own trading decisions, because it's our belief that the reason why most traders fail is because they're basing their decisions off of someone or something else, just as you saw in that opening example there where you're basing your decisions off of the news. The decision should be based off information that you've been given, that you've studied, that you've researched, that you've been mentored on, and then you make your own decision. That, in my opinion, is the only way you will become consistent in trading. Not by going to some chat room and listening to what everyone else is buying or selling, not by looking at a ton of indicators and trying to figure out if all the lines are crossing together, and not by watching TV and seeing what all the news pundits say about what the market is doing or interest rates are doing. I mean, those, in my opinion, are recipes for disaster. I stopped looking at those things over 30 years ago, and I believe that is what has sustained me to be able to trade for nearly 40 years. These are the same things my mentors taught me, because I traded just about the same way almost everyone has been taught, looking at all the conventional wisdom, conventional indicators, conventional techniques, and nothing seemed to work. And so it wasn't until my mentors told me to strip away all of this, what they called useless noise, that my trading started to become consistent. So this is the same techniques and methodologies that I teach my students and my members in over roughly in over, I believe, 100 countries around the world, in virtually every state in the United States. Okay. So we're an educational company. We're trying to mentor you so that you can ultimately become a part of the process and make your own trading decisions. So this leads us to today. I'm going to share with you great techniques for increasing your odds for success. But one thing I just want to mention, since this is a classroom, please, if you have any questions, kindly wait till the end of today's presentation to ask them. I promise I will get to each and every one of them, but many times the presentation seems to slow down or bog down if we wait for every question to be answered. So let's just wait till the very end. If you're having technical difficulties, if you can't hear, if you can't see the screen, just log off and log back on again if it keeps dropping out. Or if you have to leave early, just remember that we are recording this, and so you can request a video from Pro Trader Strategies, okay? All right, so let's begin. And let's start out with the number one question you should never ask, okay? This is extremely important, because I think after you've probably seen it, you will say, boy, I guess I do this a lot. Trust me, when I say these things, I'm not trying to be arrogant or condescending. I'm saying them from firsthand experience, because this is the way I used to trade when I first started as well. But the question I hear coming from so many traders, and it does not matter if you've been trading for 1 week, 1 year, or 1 decade, most traders ask this, and basically they're saying, what do I do now? Okay? You should never, ever even say that to yourself, just, in your quiet mind, but just saying that, boy, what do I do now? I'm in the trade. I have no idea. Okay? Because that's basically saying, I have no idea. Tell me what to do. You're basically telling the market, I have no say in this. I don't know what I'm doing. And so why should I even be here? Can you imagine an airline pilot being up in the air flying with hundreds of people on the plane and then saying to his co-pilot, what do I do now? Okay, well, how do I fly this thing? What happens if we get weather? What happens if I get lost? What do I do? Or can you imagine a surgeon, once he's opened up the patient, asking his assistant there, or the nurse, saying, okay, what do I do now? Okay, how do I operate? And what happens if we go into complications? Trading is no different. Trading is not a hobby. Trading is not something you should, take lightly with all your hard-earned money. It's a profession. It's not something that, should be any different from an attorney, a doctor, or, an airline pilot. So you would never see those people in those positions saying, well, what do I do now? And it should be the same way with your trading. Now, many times, people say, well, I never ask myself, what do I do now? But trust me, every time you ask a fellow trader or you call someone up or send an email, what do you think of the market? Or what do you think of this particular stock? Or what do you think about interest rates? What you're basically saying is, what do I do? Okay? You should never ask anyone what they think, because what does it matter? You get, all your decision making from the things that we teach in our courses. So I never ask people, what do you think of the market? Why would I ask that? Because they have no better idea than anyone else. And in fact, I have no better idea than anyone else. So never would you ever ask me. When people ask me, I've been in webinars before, or I've taught in seminars, and they say, what do you think of the market? My first answer is, I have no idea. Because I just listen to what the market tells me, and then that's what I do. I react off of what the market is doing. I have no idea what it's going to do. So never ask yourself, what do I do now? Even if it's in the form of asking someone else, what do they think of the market? What do they think of this particular stock? What do they think of these interest rates? What do they think of this indicator? Because basically you're telling the markets, and you're telling all your peers, I have no idea what I'm doing. And you should never be at that spot in trading. Now, however, there are questions that you should be asking, and these are what I'm going to be teaching you today, because these will increase your odds for success in terms of consistency. But you should only be asking yourself this, all right? Remember, keep everything in-house. In other words, you are in charge of your destiny, not someone else, not someone in a webinar, not someone on TV, not someone in a trading room. You are in charge of your own trading process. So these are the questions that you should be asking, and not someone else. Ask yourself these. All right, question number 1. You should always ask yourself before you even trade. If you have an idea for buying or selling something, ask yourself, am I on the right side of the market? All right, now most people would say, well, yeah, Steve, I am, because interest rates came out, or the volume is really strong here, or actually all the institutions are buying here, so I want to be on their side, right? That's what I've always been taught. Okay. That's not how you find out if you're on the right side of the market. Those people or those things have no better odds for success than flipping a coin. Here's how you find out. Let's say you're looking at this stock MCK and you say, okay, I like this stock. Either you've done your analysis, maybe you've looked at the earnings of the company or its growth, and you like it. It doesn't matter what your decision is based off of. Always ask yourself, am I on the right side? Well, how do you know? Because looking at this chart, it basically looks like it's going sideways for the last couple of months. Here's how you ask yourself if you're on the right side. Always apply a 50-period moving average. And then ask yourself, where are the majority of prices or the majority of closings of the bars on this chart? Obviously, the majority of them are above, right? So that means the overall trend is up. And if the overall trend is up, you only want to be a buyer. So, as we see here in this case here, where is price in relation to the 50-period moving average? Well, the majority of bars are above. So the overall trend is up. So yes, you are on the right side to consider buying this. All right? That's the first question that's been answered. Now we go to question number 2. More important than any of the following questions is, where do I place my initial stop? Okay? This is so important. Most people ask this last, or most people don't even ask this question. Once they're in the trade and they think that, they come in with the best case scenario that things are going to go great, I won't even have to worry about protecting myself, You never think about the worst case scenario, but that should be the first thing you think about once you're in the trade. Imagine once again, an airplane pilot saying, well, there shouldn't be any trouble with flying this. It should be fine. I won't even consider anything bad's going to happen, so I'll cross that bridge when I come to it. No, an airline pilot or anyone else in any other profession knows in advance what happens or what to do if something goes wrong. That should be the most important thing, and no different when you're trading. So once you're on the right side, ask yourself, where do I place my initial stop? In other words, you're saying, if I'm totally wrong, if it doesn't work out, where do I get out? Okay? So, as we look in your example here, once again, you want to buy MCK. Well, we have a number of stop placement in all of our courses, but let's just take the most common and probably the most easiest to identify, just the current low, or where we had a short-term low. Let's say our stop is there, okay? That would seem right. Plus, it's on the opposite side of the 50-period moving average. So most likely, if we started trading down there, it would appear that the overall trend had changed to be down now. Now, what you want to do is ask yourself, well, how many points am I risking? And this is extremely important because this is going to help you identify other certain points, and it's also going to help you answer other certain questions. So right off the bat, we know we're losing. If we place our stop here, we're losing 5 points. Can you handle that? Can you handle a loss of 5 points? Let's say you're trading 500 shares. Can you handle that dollar amount? Maybe you want to scale down to only 100 shares. Maybe you do have enough money in your account for that. So maybe you want to trade 1,000 or 2,000 shares. It all depends. It's up to you. But that's how much you're willing to risk, 5 points, however that's transferred into dollars and cents. Which brings us to question number 3. All right, so now that we know how much we're willing to risk, and if we are okay with that risk, then we can decide. Only then can we decide what is my profit target. In other words, where am I getting out? Okay? You don't decide that first. The first thing you decide is how much am I willing to risk and how much will I lose if I'm wrong. That's where you place your stop. Then once that has been decided and you know the numerical value, then you can decide what your profit target is going to be. Let's look at the example here. If we're buying at 191 and we're willing to risk 5 points, okay, so we're going to sell basically at 186. Now, if we're risking 5 points, what most people do, just a standard, very basic way of defining where you're going to exit is simply to exit at twice your risk size. In other words, it's a 2-to-1 risk-reward ratio. You're risking 1 to basically make 2. So if you're risking, if one lot is 5 points, then 2 would be 10 points. So you're risking 5 points to make twice that, which is 10 points. It's just a simple, basic way in which to trade, okay? And that would mean you would exit up 10 points at 201. So you've answered the third question, which finally goes up to the last and final question, which is question number 4. How do I protect my profits? This means if things are going your way, if you're not going to be stopped out at minus 5 points, how do you protect what you have? Say you've got things going in your direction. There's a very simple basic technique that we suggest that all of our beginning members become a part of. You decide where you're going to get out. You have a fixed exit, which is 10 points higher. And once you go half the distance to that exit, which would be 5 points up, that's where you want to move your stop to unchanged, okay? So let's say we got into the trade and we continue to watch and things are going our way. And now that we've got up to half point, we move the stop up to 191. So this means if MCK runs out of gas and doesn't get to our defined exit point, we're still not going to lose any money. And you just increased your odds for consistency because you're not turning into a 1 step forward, 2 step back type of trader. You're turning into a 2 steps forward, 1 step back type of trader. In other words, you will have small losses from time to time. Many times those losses will just be the loss of commission or maybe a tick or two because you've moved your stop to unchanged. So we no longer have our stop at 186. We've moved it up to 191. And now the only thing left to do is to watch the trade unfold. You see, when you have a plan like this in place, when you've asked the right questions, remember, let's review. What are the wrong questions? The wrong questions are, what do you think? What do you think MCK is going to do? Where do you think it's going to go? Okay, or where should I buy it? Do I get out today? What do you think? Do you think the market's strong? I mean, listen how negative that sounds. It's basically just saying, I have no idea what I'm doing. Tell me what to do. All right? Sound like a little 3-year-old. It's like someone asking for permission to trade, and you should never do that. So once you have these 3 or 4 questions in place, you know your plan. You don't have to ask somebody where I should get out. You already have a limit order in there, an open order. You don't have to ask yourself where to place your stop. You've already placed it and you've moved it to unchanged. All right. You do not have to ask yourself what you think the stock is doing because it's told you already it's above the 50 period, so the overall trend is up. So there's nothing to ask anyone. The only thing left to do is simply to watch the trade unfold. You're either going to get stopped out unchanged with nothing to lose, or you're going to have a nice profit of 10 points. I've often told my students that if you are trading correctly, you should be very bored. Because you're basically, most of the time, 3/4 of the time, you're just sitting back and watching. It's like fishing. You just cast your rod there and you just wait. And you just kind of wait and just say, okay, well, I'm waiting for this. Let's see. I'm either going to get a fish or not. Okay? And it's the same thing with trading. So we just simply watch the trade unfold. We've moved our stop up to 191. And as we move up, by the end of a week or two, we have a nice 10-point gain. Okay? There was no one we had to ask. There was no indices we had to check or different time frames to figure out what the market trend was. We did that with just one simple indicator, the 50-period moving average. There were no institutions we had to look at or volume or tons of indicators. Okay? There was no chat room we had to be in to check daily to see what they thought of the markets. There was no TV you had to watch and sit and watch these guys talk about what they think the market's going to do. You see how overcomplicating that is, but more than anything, it's basically saying, tell me what to do by listening to all these outside sources. At Specialist Trading, we give you all the information and the things that have stood the test of time, and then you make your decisions. Once again, it's our philosophy. The only way you will become a consistent trader is by making your own decisions. And as you see here, that was a great exit point because look what happened in the market. It started to go lower. Now, let's look at another example, okay? Same exact thing. You're coming into this older chart of Tiffany here. Someone would look at this and say, well, Steve, I was talking to some guys in a chat room, and they said that this stock should be bought. Okay, why should this be bought? He says, well, right off the bat, I want to buy it here because it looks like we've kind of bottomed out. And I did a little research, and we've broken this short-term downtrend. Okay, that's always a positive sign. We've broken out of it, the first close above. And the guys in the chat room I listened to said that the institutions are buying right at this level here. This is where the institutions came in. This is where the volume confirmed it. All the big guys were trying to pick a bottom in Tiffany. So this is, a good sign that it's most likely going to hold here. So I just think this is a, good buy, and I'm going to step in and buy this. What's the first question you ask? Okay, very first question. Am I on the right side of the market? Forget about what the institutions are doing. Forget about what the Elliott wave count is or the Fibonacci pullback or what somebody's saying in a chat room. Don't listen to those things. Just listen to the market. And the market always tells you what it wants to do. So what's the market saying? If I add the 50-period moving average, am I on the right side of the market to buy? Absolutely not. If you're below the 50-period moving average, the market, not some guy in a trading room, but the market is telling you the overall trend is down, and you'll have a greater chance for consistency if you sell instead of buy now. Okay? So let's say we didn't know this, or let's say we said, well, I kind of trust the guys in my chat room. I'll buy. Everyone's buying in the chat room. So you buy, and look what happens. Okay? Most likely you'd be stopped out. But let's say you did take some of our courses, you had some of our education. You said, no, I'm not going to jump in and buy. Even if it goes up, you can still go up and be below the 50-period moving average. So I'm going to look for an opportunity to go short. All right? So you're stopped out. If you did take this trade, you got a loss, and you're thinking like, boy, I don't understand why. It should have held at that double bottom. That's where all the institutions bought. Okay? We're not concerned with any of those things. You just watch the stock unfold. And as you can see, it did start to bounce. But remember, price is still below the 50-period moving average. Now, if you like to look at trend lines, well, here's a trend line. And here's the first close below that. And let's just say out of your analysis or whatever you like to watch, you did get a sell signal. Well, that's okay because we're below the 50-period moving average. So at least, we're not going to say it's going to work because we don't know what the methodology is based off of, but at least you're on the right side. Now, that's where you decide to sell. Question number 2, where do I place my initial stop? How do I protect myself? Okay. And let's just use a common area right here, those short-term tops that are above the 50-period moving average. Let's just say that's where we're going to get out. If we go above there, most likely we're changing our overall trend because we're above the 50-period moving average, and most likely we'll go higher. So that's where I'm getting out. Then you have to define how many points is that. Okay, what is my profit target? The only way you can decide what your profit target is by defining the number of points that you're risking. All right, so we're risking 3 points. That's okay. Let's say you can take that 3 points. Let's say you have 100 shares, $300. Okay. Let's say you have 1,000 shares, $3,000. Whatever it is, you have to look at your account and say, I can risk that. That's okay. I'm willing to take that loss if I do lose 3 points. Okay. Well, since it's 3 points, now you know where to exit your short. Now you know that you can cover twice that amount, which would be 6 points. All right. So if you sold at 76, your stop is basically at 79, but your exit point with a profit would be down 6 points or at 70. So you're risking 3 to make 6. So you've entered your stop placement. You're in the trade short now. You entered your stop at 79, and you've entered a limit order to buy at 70. Now what do? Well, we have to figure out how we're going to protect our profits. What if things start going in our direction? Well, we use that 50% rule or 50% suggestion. Halfway from 76 to 70 is 3 points. That's our 50% level. Once we get there, this is one of our techniques we teach. Not the only way. We have a number of other ways to protect your profits, but this is one of the standard techniques we teach on how to protect. If you go half the distance to your exit point, you'll move your stop to unchanged, or it's 76, down from 79 to 76. Okay? So as we can see, price starts to go lower. Boy, we had a nice first day of being in the trade, and it kind of hovers until ultimately we get to that 50% level. So what does that mean? We're moving our stop down to 76. So now we're not risking anything. We've protected ourselves by moving our stop to unchanged. So if it does run out of gas on the downside and it does start to go up, well, guess what? We're going to only lose price of commission or maybe just a little slippage, but nothing great. So, as we said, now we go into the boring phase. We just sit back and watch. The only thing left to do is to watch the trade unfold. There's no reason to monitor and have 20 phones ringing all the time or tons of screens in front of you and tons of markets. It's silly, you know. That's not the way trading's supposed to be. Trading's supposed to be boring. If you are trading correctly, it's extremely boring because you're just sitting back and watching half the time. You're not making tons of phone calls. You don't have 20 screens in front of you. You don't have multiple markets. That's not the way trading should be. Trading should be one screen in front of you and just sit back, and most of the time you're reading or watching a movie because you have everything in place. All right, so we have the trade in place, and as we watch it unfold, you see how easy it is to be profitable, in this case 6 points profitable in just about a week or so, when you're in sync with the overall trend and you're discounting all that useless outside noise. Remember, my mentors taught me the same thing nearly 40 years ago. I used to trade like everyone else. I had maybe 20 indicators on my screen. I watched every news event that came out. I had the earnings on all my stocks. I traded about 50 stocks, and I knew the earnings and all the details of the company on each and every one of them. Okay, we didn't have trading rooms or chat rooms then, but we had subscriptions, newsletters, and I subscribed to each and every one of them. Elliott Wave to Fibonacci, everything, you know, what all these guys were saying in the markets, and I couldn't make any money. I couldn't understand it. I was doing everything right, everything I've been taught. My mentor said, Steve, simplify your trading. Get rid of all that useless noise. Don't worry about earnings. Don't worry about subscription letters. Don't worry about indicators. Just follow a few simple things with a grain of salt, but only listen to one thing. That's the chart in front of you. That's how you'll become consistent. And I thank them for giving me this consistency for nearly 40 years. So this is my way of paying back by teaching all of my students and members as well, the same things and the same techniques that were taught to me. Now, let's say we want to increase our odds for success even more. Well, we add what we call the ATTENDEE. This is probably one of our most popular and powerful tools we have. And you notice I say tools because it's not a strategy. It's not a system. It's not an indicator that you base buy or sells off of. It's simply a tremendous directional tool that we have at Specialist Trading. This was something I was taught to on the floor that we've turned into an algorithm that simply colors the bars, either green or red. This is how we will increase our odds for success, because I'm not going to sit here and tell you that if you just ask yourself these 4 questions, every trade's going to be a winner. It doesn't work that way. Nothing in life works that way. You're not going to have 100% winners all the time. Every once in a while you will have a loss, and every once in a while you will go into a small minor slump. So how can we increase our odds better? Well, we add the ATTENDEE. This is how it works. As I stated, the ATTENDEE is a color bar tool, and it's designed to confirm your entry signal. So we want to use this to confirm when we're entering. And it's also designed to keep you in winning trades, because many times, let's say you don't want to get out at 2 times risk. Many times you'll get out and you say, boy, that worked great. Thank you so much, Steve, for teaching me all this stuff. I made 5 points, but now it seems like I'm getting out too early. Well, this will keep you in trades longer, many times. Okay? Nothing is guaranteed, but it really will increase your odds for success in terms of consistency. Let's look at this example in HRL. All right, we use the same plan that I just shared with you. Ask the same 4 questions. You're on the right side of the market. You entered, you place your stop, and you defined your exit by simply being twice your risk amount, okay? And you had a nice 3 3/4 points in a couple of weeks, okay? Let's say you wanted to confirm that with the pet D though, all right? Once you have the pet D, you just simply add the color bar, and as you can see here, now it changes the bars from green to red. Now, the day we entered at 67.80, what was the color of the bar? The bar was green, so this is the confirmation telling you it's okay to be in the trade. Now we can also use it to keep us in the trade longer. Let's say you got out at 3 3/4 and look what happened. Okay, and you say, boy, I gave up 11 points instead of making 11. I only took 3 or so. Well, once you have the pet D, as you can see, as long as the bars are green, you're in this trade. You're still in the trade. But on the very first red bar is your chance to go out. Okay, so you can use that as your exiting tool. You can either exit on the close of that bar or on the opening of the next day. Either way, you're going to capture a lot more points than simply capturing 3 3/4. Now, what a lot of our students like to do is use a standard exit point to sell half of their position and then let the rest ride. Now, in here it worked perfectly because it continued to go higher and higher, and you would have gained an extra 11 or so points. But even so, we're not saying that happens all the time. Many times it'll go up a little bit more and then come back down. In this case, that's okay because you sold half your position here and you moved your stop to unchanged, so you still made money on the trade. How about MANH, MANH? As we can see here, we had the same 4 questions, the same trading plan I just had shared with you, and a nice sell strategy technique here. We're below the 50-period moving average, so we're in sync with the overall trend. We went short 71.70, placed our stop just above that high there, and then doubled the risk to exit in just about 2 weeks for a nearly 5-point gain. Okay, not a bad trade, all right? But let's add the pet D. Once we add the pet D, we see that the bars have been red since here, and we continue to be red, so this was a good trade. It was confirmed. And if we didn't want to simply exit everything here at 67.20 and cover our short, we could have let it ride, and instead of just making 4 or 5 points, that could have turned into a 15-point gain, okay? And you'd still be in the short side because it hadn't turned green yet. So you see how simple it is. It just colors the bars, and it tells you if you took the correct trade. It also tells you if you want to stay in longer, when to get out. Now here's another great example here in PSA. We realize this is an expensive $200 stock. You can apply options to this. You don't have to buy the actual stock. You can simply buy directional calls in this case. On this one, you would have simply taken the long signal. We're above the 50. You can barely see the 50 period here with this small chart example here, but we're above the 50. So you're in sync with the overall trend. You go long at 229.30, place your stop down here, double the risk, and that exits you at 7.4 with a profit of $7.40 in just about 3 or 4 days. That's not a bad trade, okay? Even if you had options, that's not a bad little trade there. Now, once we add the pet D, we see that it was confirmed. The pet D colored it green. That's the day you decided to get in. So the pet D confirmed this as well. But let's say you wanted to stay in the trade longer. Well, look what happened. Even when we had sell-offs, the pet D was coloring this green. Even when we had 3 or 4 days downside, the pet D colored it green. It wasn't until way up here, another 18 points more in profit, that it told you it's time to get out, because that's when the trend is changing. Remember, the pet D is not a strategy. It's not some type of system. All it is a short-term trend identifier. So we can use that trend identification either to confirm a signal or to keep us in the trade longer if we'd like. Let me show you how powerful this in terms of confirming. Now, as we look at this older chart of eBay, we see here that we ask ourselves the first question, am I on the right side? Well, we wanted to buy here, so yes, we're on the correct side because we're above the 50 period. So we answered that question correctly. We're not trying to sell. We're okay, all right? So we know where to place our stop. How do we protect ourselves? We placed our stop just below that lowest low. So we defined what our risk amount was, and we simply doubled that for our exit. So we were all in place. We got the order. We're all in. We're all ready to go. But if you're a member of our Pet D course, the last thing you want to do is confirm your entry with the Pet D. In other words, if you are thinking of buying, the day you buy, that bar must be green. So once we add the Pet D, what color is that bar? The bar is red. So that's the final piece of the puzzle that needed to be required, and it didn't meet the requirement. It needs to be green. So you could either wait Or you would have said, you know what, I'm pulling out of this trade altogether. I'm glad I saw that because look what happened. Now, had you waited for the first green bar, well, that's good because you never would have gotten into the trade, and ultimately we're below the 50-period moving average. And now you know once we're below and the bars are red, the level of consistency is to the downside, not the upside, as we see here. So the PET D will really increase your odds for success, not only by keeping you in the trade longer so that you have the potential to make higher gains, but it will also confirm your trades, telling you whether you should be buying or selling. Remember, you can add this to any strategy, any technique, even a system if you'd like. It does not matter. It's simply a finely tuned directional tool that I've been using for over 30, 35 years that has helped me in terms of my consistency greatly. I use this on a daily basis. All right, before we go to questions now, let's just review what we went over. Here's what you learned today in our course, educational course. The number one question you should never ask. It comes in many different forms, but basically what you're saying out loud to the market is, I have no idea what to do. Because you're asking, what do I do now? Now, many traders aren't even aware that they ask that because they ask it in a different form. They'll ask someone, what do you think of the market? Or what's your thought on that interest rate hike or that, whatever that news that came out? Tell me what you think about it. Please, if there's one thing you learned today, never ask that question. Because why? Because you're turning your trading into a crutch. You're relying on what someone else is going to tell you. The only thing you should be relying on is what the market is telling you. And it has a number of ways of speaking, okay? How do you find out what it says? Ask the 4 questions. These are the only questions you should ask, and you ask the market. Am I on the right side of the market? Well, just plot a 50-period moving average, okay? This can be on a 5-minute chart or a monthly chart. Doesn't matter. You should always have a 50-period moving average plotted, and if the majority of price bars are above and closing above, the market, not some guy in a webinar, not some guy on TV or in a chat room, but the market is telling you the overall trend. Okay? Second question, where do I place my initial stop? Well, we have a number of places in which to place your stop in all of our courses and techniques we teach at Specialist Trading. It's very basic. All you have to do is look at a former top or former short-term low, and you can define that as your stop. Okay? But what you want to do is ask that first. Most people never ask that question. Remember, once again, that would be similar to a doctor saying, well, I never asked, what happens if the patient goes into cardiac arrest or he starts bleeding. I never really worry about that. That's the first thing you should learn and know how to distinguish against when you're on the operating table. It's the same way with trading. You should know exactly right off the bat, where do I get out if I'm wrong? So that's what you do. You ask yourself, where do I place my initial stop? And once you've done that, then you'll know where your profit target should be. So many people have a focus now on risk-reward ratio. In my opinion, a little bit too much focus. It should be, they're giving too much attention to that. I think this is some of the myths that are taught to us in conventional wisdom. But this is something you should take with a grain of salt. So if you really feel that much importance in putting in risk-reward ratio, well, it should be twice how much you're ever going to risk, at least twice your risk point. So that's why we ask ourselves where our initial stop is going to be, because then we can define where our target is going to be. And then lastly, how do I protect my profits? Extremely important. If things are going your way, if you have a profitable trade, how do you protect yourself? Trust me, I know from experience, the worst feeling in the world is not, buying or selling something and then immediately losing. That's just price of doing business. That happens all the time. The worst feeling in the world is to have a nice profit in your pocket and then wake up the next morning and it's all gone, or in a couple of days or maybe even a week. And you're saying, what happened? I had some really, I was like that close to getting out, and then everything turned, and now I have a loss. That's the worst feeling in the world, worse than anything, because you almost had it. So you have to protect yourself once you're in a profitable trade. And what we taught you today is simply move your stop to unchanged when you get half the distance there. Okay? These are all important techniques, very simple, very basic, and just the tip of the iceberg of all the important things we teach at Specialist Trading. But I think one of the most powerful things we teach in our courses is how to increase your odds, and that's with the PET D. This is one of the most popular tools. I use this, as I said, on a daily basis, and we've made it really simple. When I first started using it nearly 40 years ago, it was something I had to calculate by hand on a daily basis. It was too difficult to even apply for intraday trading because you had to work out this formula, and by the time you figured it out on a 5-minute time frame, you'd have to figure out what it was on another 5-minute time frame. Now we've made it into a color bar algorithm where all you have to do is just look at the color of the bar. The bars are either going to be green or red, and then from there we teach you in the courses how to identify and what to decide to do based off of that. Now, before we go into questions, I want to offer you a great special that we have. This is today's attendee special discount. This is going down to all the people that have attended today, but only for the next couple of days. It's a great, great discount, and we're offering you our 7 Secrets of Money Management course. This is a great, great course. So many people don't pay attention to money management. If you can believe, all the things I taught you today, the 4 main questions you should ask, even the question you should never ask, all fit into money management because you're managing the trade. You know, money management is not just stops. It's also about exit points. It's also about protecting your profits. It's also about, making sure you ask these questions that you're on the right side. So we have tons more of information in this. Okay, this is detailed instruction, 8 videos. We teach you about stop placement, 6 techniques. I just shared with you one of the most basic ones today. We give you 6 different stop placement techniques. We talk about risk-reward ratio, the RPS method, which automatically defines and takes the guesswork out of how many shares or contracts or options you should be trading. We go into advanced trade management, which is our ATM formula, and then you also have lifetime personal correspondence with me. Okay, so we're offering our 7 Secrets of Money Management course along with the ATTENDEE, this great tool that I just shared with you, how powerful it is of defining whether you're in the right trade and also keeping you in the trade longer. It's a roadmap for any market. It comes with the add-on automatically, so it'll automatically change your color bars from green to red. This also comes with 2 continuation trading techniques as well as 2 pullback trading techniques and as well as a trailing stop technique. Remember, you can apply this to any market, any strategy, any time frame. So it doesn't matter if you trade tick charts or if you trade monthly bars. And as well, you have lifetime correspondence with me. Now, people that have these 2 programs, since they are so voluminous and very big programs, I mean, there's a lot of information in all this. This is our money management ATTENDEE combo. There's a lot, tons and tons of information. It sells for over $5,000. But we're discounting this today for all the people in attendance with payment plans down to $39.95. Remember, this comes with a payment plan. So for a small deposit, you can be up and running with both of these great courses, and you can get your trading right on track, and you can be up and running ASAP. But remember, this discount with the 2 together in our special money management combo is only going for the next couple of days. So here's how to take advantage of that. As I stated, I've teamed up with Pro Trader Strategies. They market and promote all of my courses. So here's the information, their email address as well as their phone number. You can call them directly and set up a payment plan so you can be up and running right away. Or if you like, you can just simply click on that link. Now that link is not live, but if you look in the chat box on the far right of the GoToWebinar column, they have posted a live link. So you can simply just click that on. It will take you to the sign-up page. You get a lot more information about what's offered in the course and the different courses together in our special money management combo. So I'm going to leave all this information up here so you can copy it down or make a phone call. I really urge you to take advantage of this because this is being discounted down from over $5,000 down to $39.95 with payment plans, but it's only going to be running for the next couple of days. So let me open up the question and answer box and answer all your questions that you may have. I see we have some people here from our other courses. Hello to all of you. Let's see. Gwen asks, what about the trailing stops on an uptrending stock? Where and when do you place them? That's a great question, Gwen, but ultimately that's part of the course. In the money management course, as I stated, we give you 6 different placements for stops, and that includes trailing stops. So that's all included in the course. So I would really recommend taking advantage of that discounted deal because you have so many different ways in which to decide how you want to trail a stock or trail a future, anything you're in, okay? And this is, once again, going back to our philosophy. We have all this information, different styles, different techniques. It's like going to a restaurant. There's all the different meals and culinary delights to choose from. It's up to you to decide what you want. And it's the same way with this. We mentor you, and I personally am your personal mentor along with all of these techniques. And then I work with you to decide what works best for your style. Okay? Because we have a number of traders who only like to be in and out of trades rather quickly. I know this is kind of like my personal style as well, because this is the way I was trained. On the floor of the stock exchange, we were in and out of trades in a matter of minutes. So I'm kind of used to that style of trading. But having said that, we have numbers of students, scores of students who like to be in the trade as long as possible. So we have ways designed to do that as well. So you should never try to emulate the way someone else trades. You should try to stick to what feels comfortable and natural to you. So we have all these different things for you to pick and choose from that will make you feel comfortable, okay? Phil asks, is the 50-period simple moving average similar to using the MACD? Not really, Phil. We don't use the MACD in a lot of ours. In fact, I don't think we use the MACD in any of our courses or techniques. Nothing wrong with that indicator, it just doesn't apply. And also, it's a little bit deceptive in that there's a little bit too much subjectivity and too many ways in which to define the proper placement of the MACD. It's a lot easier just to have a 50-period simple moving average on your chart, and you can see if price is above or price is below. That's all you need. It tells you the overall trend. Okay, so it's a lot simpler in my opinion. Trust me, I used to use the MACD. I used to use all those other indicators. I only really use maybe 1 or 2 indicators at most now. Okay. William says, Steve, great presentation. Thank you, William. Is the PET-D available for Thinkorswim? Does the PET-D work on candlesticks instead of price bars? Thank you. I'll answer your second question first because that's the easier one to answer. It works, yes, on any type of bars, range bars, open, high, low, close bars, as you just saw, and as well on candlesticks as well. There's just a few things you have to alter in terms of the way the candlesticks are plotted, but yes, we have a great tech support that department that works with you with this, and so I use them on candlesticks myself. So there's nothing. The presentation I just gave you today is based off of open, high, low, close, but we have other presentations if you haven't seen them before, where we use nothing but candlesticks with the PET-D. So yes, it works. Now in terms of your Thinkorswim question, yes, it does work with Thinkorswim users, but there's a few different alterations you must make because of the way Thinkorswim is formatted. We cannot show the PET-D or our buy and sell arrows on there. So what we do is we have a great way. We just take and we split the data from the Thinkorswim data feed and we use it onto a free NinjaTrader platform. And we supply this with you all also. So our tech support will set you up with that. It puts all the same information, everything on NinjaTrader. You don't have to pay for anything extra. And you can look at both platforms at the same time if you'd like. But you just know that the PET-D and all of our other methodologies can only be viewed on the NinjaTrader. But it's very simple. We have, I would say, more than half of our customers are Thinkorswim users, and they use it this way. And we set this all up for you. Our tech support department does it all probably in just maybe less than a half an hour, maybe 20 minutes. And it's all done over the phone and directly on your computer, and it's all free of charge. So it's really simple and really easy for any Thinkorswim user, okay? Nick asks, would it be more profitable or less profitable to use a trailing stop rather than manually moving the stop to break even? Well, Nick, that would be only way you could answer that if these were statistically, challenged or they were proven and we were some type of a systematic company. But remember, everyone trades differently. We have a number of different ways for protecting your stop. That was just one simple one. So there's just 1,000,001 ways on how to protect your profits. That's just suggestion. We do not require that you have to do that. We suggest this to all of our beginning members only so that they do not lose confidence if they happen to have a series of losing trades. This way, you're ultimately just breaking even and you understand the process. But there's no way to quantify that because that would mean we'd have to systematize this. And remember, we do not teach nor trade systems. All we do is teach and trade strategies which allow you to make your own decision. You see, a system doesn't allow you to basically make a decision. In fact, it does the opposite. It takes you out of the game. It says, these are all the rules. All you have to do is just simply follow them. And we don't believe in that. Remember, you have to make your own trading decisions. So, whereas systems are 70% rule-based, or I should say 100% rule-based, strategies are 70%. We have our strategies based on about 70% of them rules, but then the remaining 30%, you can decide whether you want to use this stop. You can decide whether you want to track the trade. You can decide whether you want to exit really quickly or exit, at different exit levels. Ultimately, it's up to you. And if we were to define just what the difference was, we'd have to go through every market, every stock, and we're not that type of a company. We're not a systematic record-keeping company. We're a teaching educational firm, okay? So I apologize for that, but we do not keep statistics on this because everyone trades differently. Not everyone trades the same, and at the same time, we do not encourage that. We want you to trade differently than someone else. Hal asks, if the bar is green when you start the day, can it turn red later in the same day? Great question, Hal. Yes, it can. The way the PET-D works is that it bases its decision based once the bar closes. So in other words, while the bar is alive, while it's in play, so to say, whether it's a 5-minute bar or a daily bar, it can change from green to red. Now, don't think that it's going to be every tick it changes color. It doesn't usually happen that way. What happens is, maybe for the majority of the day, you'll see the bar green. And then let's say the last 20 minutes you get a sell-off. Well, maybe the bar may turn red, but wherever it closes, that's where it stays. In other words, it will not recolor itself 10 bars down the road in the future. In other words, if it closes green, it's always going to be green. If it closes red, it's always going to be red. So therefore, you can pretty much see, we have a number of strategies which call for you to enter the next day based off what the bar is. But a lot of our students like to jump the gun, and there's nothing wrong with that as long as they've researched it and they feel comfortable with it. They'll wait for 5 minutes before the close, and they see that, listen, the bar's green. It's confirming what I want to do. I don't have to wait for tomorrow. I'm just going to buy in the close. All right, that's okay. There's nothing wrong with that. It's just, it's not something that we teach. But remember, we want everyone to trade a way that makes them feel comfortable. Let's see. Hello, Steve. Are there any customizations the user can set or adjust with the PET-D? Good question, Scott. What we do is we have our standard PET-D. Sometimes this is called the fast PET-D, but it's the standard PET-D. What I would say that the majority of our decision is made off of. This is the one that I mainly use. It is designed, to get you mainly into trades for confirming trades. Now we also have the slow PET-D, which is not used as much, but mainly the slow PET-D will keep you in a trade longer, or maybe a lot of times it's used to keep you out of that whipsaw. In the summer when the markets go into a range up and down. Well, if you're using the standard PET-D, you'll get a couple of green bars, maybe one red bar, back to a couple of green bars. With the slow PET-D, you'll see the majority of bars staying one color. So that's where it would help you. It all depends on how you like to trade, once again, and the market environment that you're currently in. And those are the only suggestions. But I would say for the majority of trades, we use just the standard PET-D, which is what I shared with you today, okay? Now remember, this is only going to be lasting for the next couple of days. I just gave you just probably the tip of the iceberg on our 7 secrets of money management today. It's 7 volumes of different information, from stop placement to tracking trades to actual money management to size, position sizing, all these different things, okay? On top of that, we're including the PET-D. This is our combo here, our money management combo, where once you feel confident by adding these things to your trading plan, then you can also increase your odds for success with the PET-D. And you'll have that 1-2 punch of feeling very confident that now you're on the right side of the market, and you also have a tool that's helping to determine whether your consistency is greater or not, okay? This is what we offer today, and we're giving you a great, great discount. But in order to take advantage of that discount, you have to take advantage in the next couple of days. Remember, we do have payment plans. So we realize that if you can't come up with that one lump sum, that's okay. You can put down a small deposit, and you can be up and running right away. Okay, so contact Pro Trader Strategies. All you have to do is contact them, and they can work together what works best for you on some type of payment plan, and they can set you up, and you can be actually up and running today if you'd like. Okay, remember, you can trade the PET-D with stocks, with futures, with currency pairs, with commodities. It does not matter what market. Okay, it absolutely makes no difference. So just because we mainly showed stocks today, don't worry, you can apply it to futures. The majority of my trading is on futures. I use the PET-D and these simple techniques I shared with you today on a daily basis. Okay, so this is something that you're basically going to be able to use on any market, any time frame, in any direction. But trust me, if you want to take advantage of this, I would strongly suggest don't wait a couple months, or even don't wait a couple of weeks, because we'll go back to that higher price, and I can almost guarantee that by the end of the year, this price will be even higher, even with the discount, because that's how popular this combo is. So take advantage of this if you want to get your trading back on track. I know we're in the first quarter of 2016 already. I can almost guarantee that most of you are not where you thought you'd be. You thought you'd be doing a lot better. So if you want to get on that track to consistency, plus have a mentor, a personal mentor there who has nearly 40 years of experience trading right alongside with you, please take advantage of this great deep discount we have today, as well as the combo package, okay? In conclusion, I want to thank you all for attending. Thanks for taking time out of your day here today. And I wish you the best of luck trading, and I look forward to you all becoming students of mine with the combo, okay? Thank you so much. We'll see you next time. Bye-bye.